Hello and welcome to another interactive session on our live webinar series, Moneyfy Mantra, where we speak with industry experts on various personal finance topics to help educate our viewers on empowering them to manage their personal finance more efficiently. So buying gold, during Diwali is, considered to be auspicious, and to help us understand more on how gold mutual funds fit to this requirement, we have Mr. Niranjan Avasthi from Edelweiss Mutual Fund. Niranjan, welcome to Moneyfy Mantra.
Hi Harsh, thanks for having me and quite excited to talk about this topic today.
Yeah. So yeah, obviously, everyone likes gold, and we'll discuss it in more detail. Just before we start on the topic, just a brief on our Moneyfy app. So Moneyfy app is a complete suite of offers complete suite of financial products, 100% digitally. One can start investing into mutual funds, start an SIP, also explore small cases, open their NPS account, and also apply for loans and insurance products, on the app. So anyone who wishes to download Moneyfy, we've given the link in the description. Please check out our app, and please also follow us on Facebook and YouTube. We'll be happy to share more content related to personal finance going forward. So I will also request all our viewers, in case you have any questions, you can post a comment on our chat. We'll take it up towards the end of this session. So yeah, Niranjan. So I have a lot of questions today. For our viewers. The first question which comes to my mind is gold has seen some bit of rally. Gold was there at $1,950 per ounce. It came down around 15% in the international market. But India, when we see the prices, from 55,000, it has just come down to 52,000 per 10 gram.
Right.
So why is there such a huge difference in the correction of prices in gold in India?
So I am sure a lot of Indians are very close to this asset class, and they hold especially gold holds a very important space in everyone's portfolio, and I'm sure a lot of people would track the prices of gold very closely. And you pointed out rightly that internationally the prices of gold have fallen a lot. However, in India it has not fallen much. There are two reasons for it. One is international gold prices are first converted into Indian prices, adding up to taxes and all. And if there is any change in the taxes over the last 1 year, and I'm sure there was one such change in the taxation, which fills that gap of the difference in the return. The second important reason is the currency depreciation which we have had over the last 1 year. So if you see on a 1 year basis, I think so our currency would have depreciated against USD close to 8-9%, and that is largely the reason why while international prices have fallen more, domestic prices have not fallen, because when our currency depreciates against USD, it adds to the returns of the gold, because gold technically is an international asset class. The pricing of gold happens at the LBMA level, and those prices gets converted into Indian prices, and that's broadly the reason why it is.
Yeah. So just for our viewers to have some more insights, I think the prices, if I have to consider as an individual for buying gold, so
Right.
is it very attractive right now, because the prices have sort of corrected drastically in the international market, while it is down maybe 5 or 7% in India.
Right.
So yeah, you go ahead.
So broadly, from timing perspective, gold as an asset class, it could be a good time to invest, because it has a very strong inverse correlation with US dollar. Generally, we have seen when US dollar is strengthening, gold as an asset class underperforms. And once it peaks out and dollar starts depreciating, gold starts performing better. We are maybe in a situation today where the cycle of dollar strengthening would be peaking out, while we cannot time it correctly. But usually once the interest rates in US start settling down, the Fed rate hikes are towards its end, usually dollar starts weakening, and that is the time when gold could start performing better. At least historical evidence is that whenever this happens, gold starts performing. Plus, over the last 2 years post 2020, I think so gold has underperformed. So these two reasons makes it a good time probably for investors to look at this asset class and invest. As I mentioned, the benchmark from a timing perspective or valuation perspective should be the international prices. Domestically, because our currency has depreciated, it has not fallen much, but internationally it has fallen much more than 15-20%.
Correct. So I think some bit on the demand. So demand for gold is driven by obviously the consumption of gold for jewelry in India,
Absolutely.
and we have other derived products for this yellow metal.
Right.
This festive season we are back post COVID. Will the gold say gold become slightly more expensive towards the as we come closer to Diwali, and we are very close, but is the demand going to lead to some price increase going forward?
See, it could, but it is very small. Time and again, we have seen, and we was looking at some data. Usually, the domestic prices of gold in India is, as I mentioned, the LBMA prices, which are the international gold prices, in dollar terms are the base price. Then they are converted into INR price. Then the custom duty and other taxes are added, and last leg is some bit of premium based on demand and supply in the domestic market. It's usually during festive season that over the actual intrinsic, not more than maybe 1 or 2%. I have seen historically 1 or 2% but otherwise it is not very high. So it may go 1 or 2% more here or there, but largely from an investment perspective, if you are looking, maybe that is not the only compelling reason to invest in gold. There are other reasons as well. So
Correct. So when any individual sees investing into gold, they have multiple things in mind. Equity perform karega, debt market acha karega, ya gold karega. So if I were to say, last 5-10 years, whether gold has actually outperformed some of the, other asset classes, or, has it been a good, mix, for diversifying the overall investment?
So we need to see any asset class for that matter, whether it is international investing or investing in gold for investments or equity. When you create a portfolio, I always say that you need to see it from a diversification lens and not from an absolute return lens. Because if you keep chasing absolute return, you will end up entering and exiting any asset class at the wrong time. If you stay consistently with your diversified portfolio at different points in time, different asset class would help your portfolio to sail through. Like in 2008, when markets were down 50%, more than 50%, gold was up almost 26%. 2011 was similar. When markets were down, gold was up. Even 2020, when largely markets were down, while calendar year basis 2020 we saw equity markets coming up again, but gold did perform well during that period. So when your equity portfolio doesn't perform well, historically we have seen gold has been a good hedge against your equity portfolio and any risk, downside risk in your equity portfolio. So from a diversification perspective, actually gold is a very good asset class to have in one's portfolio. You should not chase any asset class for that matter, that if it is performing well now or it's going to perform well, I would allocate more to this. That is more of a tactical asset allocation. And more often than not, we may go wrong. But if you are trying to do a tactical asset allocation, one should look at gold as a strategic asset allocation and have some portion of their allocation into investable gold asset class, and not jewelry, because that's not an investment. But mutual funds or some paper gold, which you can keep rebalancing, keep adding when you want, but hold it for a longer period of time, a strategic allocation, because it will help you when the other asset classes, be it equity or maybe debt also, uh, are not performing. Gold will be a good hedge to your portfolio.
So as we speak on, having a strategic asset allocation towards gold. So, what is that 1% or a band of percentage one should, look forward,
Right.
to investing in gold? Should it be a, larger part of one's portfolio, or it should be a, fairly a smaller part of the portion compared to equity or debt?
Right. So these allocation questions are very difficult for me to answer, because there is no one size fits all. Uh, every individual is different. His risk appetite is different. Investment horizon is different. If I would say, if it is 5 to 10%, it could be right for few people, but absolutely wrong for many people. So what I would suggest is, if you are a long-term investor, maybe 10, 15 years, and most investors who invest in equities and all look for long-term investing, then maybe a percentage of maybe 10 to 15% kind of allocation to gold could be a good allocation. If you are a maybe risk averse investor, uh, then probably this percentage can be a bit higher, because your equity allocation comes down. So it's very dynamic. There's no one answer, no one right answer, I would say. uh, I think so. Advisors and partners like you can definitely be more helpful in guiding your investors when it comes to asset allocation.
Definitely. So, Niranjan, one very interesting question. So, there are various products available for taking an exposure to gold.
Hmm.
And I think one the commonly used method by everyone is going to a jewelry shop, buying a gold bar or a coin or a guinea, and
Right.
that's the investment.
Hmm.
So that over time, last one decade or two, we've seen series of products coming in. We've seen gold mutual funds, gold ETFs, sovereign gold bonds. Now there's some digital gold, which most of the platforms have. So what, according to you, will be a more optimized, call for an investor who is looking for gold?
Right. So can you hear me? Is my
Yeah, I
voice
can hear you now.
okay?
Sorry.
So see, for any investment, the basic thing should be liquidity. And when I say liquidity, means you can sell and buy at lowest cost possible or lowest impact cost possible. Now, when we look at gold, the options which you just mentioned, right from physical gold, jewelry to paper gold, or mutual fund, one needs to see where I would get optimal liquidity when I want to sell or want to invest more at lowest possible cost. Physical gold, of course, has its own cost associated when you go and sell it. uh, Also the storage cost. Paper gold is definitely one of the most suitable way of investing in gold if you are looking it as an investment. And within paper gold, then mutual funds definitely fits the bill much better, because there is a peace of mind. You don't need to worry about its safety, purity, which is the major challenge when you buy physical gold, and liquidity, which is the most important thing. So all these two three important points uh, are very I would say convenient when it comes to gold mutual funds. So maybe gold mutual funds, and I would definitely say, if you don't want liquidity, or if you're okay with partial liquidity, maybe sovereign gold bonds are also a good option for investors who are looking for longer period of time. But of course, there's some bit of liquidity challenge also. But if you look at from all perspective, lower cost, purity, and liquidity, then maybe gold mutual funds fit the bill much better.
Correct. So, just one question related to that. When we go and buy gold, offline, or we call
Hmm.
it offline,
Hmm.
but to a jewelry shop, they charge a 3% GST,
Yeah.
and that GST, one I want to sell gold, I cannot claim it back. So does does this have a larger impact on if I were to, invest in gold, because, upfront 3%, I'm just paying it away. So
Yes.
what's the impact of this GST when I invest into a gold mutual fund?
While investing in a mutual fund, as I mentioned, the NAV of a gold mutual fund is calculated based on uh, the LBMA prices, which are international prices. From there, over that, first is it is converted into INR, and then our custom duty and any other taxes are added to it. GST is not a tax which gets added. Uh, and for customer point of view, when customer invests in gold mutual fund, there's no any tax which gets deducted, or which he has to pay from his own pocket. It is the only price at which he buys it. There is a price at which he sells it. In between, if there is a profit, he pays a tax, which is an income tax. That depends whether he is selling before 3 years or after 3 years. The taxation is different, but there's no any other taxation which gets, which impacts the customer. In a sense, when he's buying physical gold, he has to pay 3% additional. So that is not the case when it comes to mutual funds.
So that's like, upfront, you know,
Absolutely.
benefit to a customer when he's, thinking to buy gold.
Absolutely, absolutely.
So
That's where I said, liquidity at minimum cost when you are buying as well as selling. So
correct.
it's the cost when you are buying a physical gold.
Yeah. So, I think, there's some making charges also involved. So
Absolutely,
does
absolutely.
that also impact, to a large extent? It's quite minimal.
No, so making charges is definitely when you buy a jewelry, physical jewelry. In paper gold, there's no concept called making charges, because the underlying investments are in gold bars, which are 99.5 pure of purity, and they're just held, and there's no making charge, because it's not the jewelry which the ETF or or a gold mutual fund buys. It is pure simple gold bars. That's it.
So you briefly covered on, the taxes which gets applied on gold mutual fund. So if you could, share more details, as in what are the exact taxes one has to pay on the returns that they earn out of gold mutual fund?
Right. So gold mutual fund, the taxation is very simple and similar to physical mutual fund actually. So if you buy a gold mutual fund, be it ETF or gold fund of funds, uh, if you sell it before 3 years, you will attract a short-term capital gain tax. The short-term capital gain tax are based on your marginal tax rate, which is based on your slab. So if you are in a 20% or a 30% tax bracket, that is the tax which you pay. If you sell it after 3 years, you get a long-term capital gain tax. It gives you indexation benefit. So on whatever gains you make over a longer period of time after 3 years, you get an indexation benefit, which means you don't need to pay tax on it. Only for returns over and above inflation, you pay tax. For example, you make a 10% return on a 3 year after 3 years, and during that period, maybe inflation is 6%. Your net return, real return is just 4%. You pay 20% tax on this 4%, which is 0.8%. So on 10% total return, you end up paying just 0.80% as tax.
Correct. So, I think, in terms of the quality of gold that you mentioned,
Okay.
I think, is it just the quality, or, that, in an individual household, or, that there's some mishandling of, these precious metals. So how quality and the security would play a role when compared to mutual fund?
Right. So quality, as I mentioned, the quality standards are very high. Uh, when a gold ETF, when invest in a which invest in gold, it, as I mentioned, it is of 99.5 purity. It's just the purest form of gold. In terms of security, this is safe with the custodians, which is the third party. So no one can claim or no one can steal it. and it is basically in e-form. So for investors also, it is very secure. No one can rob a mutual fund from you. At least till now, I haven't heard anyone robbing mutual fund from your demat or from your holding accounts. So from security purpose also, it is very safe. And purity, as I mentioned, the regulation itself is very clear that it can buy only 99.5 purity gold as in underlying in any gold ETF or a mutual fund.
Okay, so everyone knows that I'm pressing more on gold mutual funds. So mutual
Yeah,
funds are subject to market risk. That's
absolutely.
everyone knows. So what
Yeah.
are the risks? One should be aware
Hmm.
when investing into gold mutual funds.
Right. So broadly, when it says risk, as far as gold mutual fund is concerned, it is more to do with the price risk, because price of gold also fluctuates, and that I would say is the only risk when you invest in a gold mutual fund. Uh, the same risk applies in physical gold also, because there also there is a price risk. I don't see any other risk apart from price risk in a gold mutual fund for that matter.
Okay, so so usually people are people understand equity mutual fund because they know that it is based on a basket of securities which one is investing. You either go
Right.
and buy the securities directly, or you can invest in a mutual fund which is investing into these equity securities.
Hmm.
And the calls which are taken are active calls by the fund manager. So
Right.
if we were to talk about gold mutual funds, does gold mutual fund only invest into gold, or that there are some other structures as well which a fund manager can invest into?
So largely within gold as an asset class, the most popular funds are gold ETFs and gold fund of funds. Now, gold ETF is which does nothing but whatever money it gets, invest in pure gold. Almost 99 to 100% of its portfolio is held in gold. Now, gold fund of funds are also there, which does nothing but they invest in such gold ETFs. Because if someone doesn't have a demat account or doesn't have any of the whether it is gold ETFs or gold fund of funds, the underlying is only pure gold. Now, there are some maybe other funds also which are uh, funds which invest in mining companies of gold, but that's very small part in India, and those are mostly equity related fund. But when it comes to gold, only two structure exist, which is gold ETFs and gold fund of funds. For both, the underlying is pure gold.
Sure. So I think one very interesting question is related to the expense ratio. So we know there are some making costs involved or there are some taxes involved. So what are the costs which one has to be aware when
Hmm.
investing into gold mutual fund?
Right. So in gold mutual fund, the cost is only the expense ratio which is charged by the scheme largely. Uh, and the other cost, because it is ETF, could be through a tracking error. Because in all passive funds, there is a element called tracking error or a tracking difference. So how well the ETF is tracking the price movement of the underlying gold is also to be seen, along with the expense ratio. So these two are largely the cost. If you see broadly the range of expense ratio which most ETFs or gold ETFs or gold mutual funds have charged is somewhere between 0.5 to 1%. So that's not very high given the purity which you get, and the security or the way it is secured, and allows you instant liquidity, uh, as well as close tracking with the gold prices. So broadly, this is the cost which customer pays. There's no other cost or hidden cost as far as gold mutual funds are concerned.
Sure. So, one, I think one last question. I think there's, gold is considered to be a safe haven investment.
Yeah.
So if you would want to, answer that for our viewers, as in, why is it considered to be a safe haven? I
Right.
think that will, clear a lot of doubts of our
Absolutely.
investors and viewers.
Absolutely. So this safe haven is not, basis what gold has given in last 10 years or 15 years. Gold has a history of almost more than 5,000 years, right? It has been used as a currency multiple times as a way for barter system. It has survived so many crises. I would say gold is the only asset class which has seen almost all crises which humans have seen over the last 5,000 years and is still shining. So that makes gold a very, very strong asset class. And the recent experiences, whether it is the Great Depression in 2029, global financial crisis in 2008, whatever happens, uh, people run to gold because it has a tangible value as well to some extent, and they've seen that whatever happens, the value of gold will increase over a period of time and not decrease for a longer period of time. So they gain a confidence that even if much to the world, gold will be something which is there with me, which I can barter and buy something else. So that value of gold, which has a history of almost 5,000 years, that gives a sense of safety for many, many investors when there is a crisis. And that is very fixed in the minds of investor, and that is the very reason why gold has been seen as a safe haven when things go wrong.
Sure. So I think now most of our questions are done. I'll just quickly check if we have any other questions. Uh, yeah, I think we covered most of our part. I think one more interesting product that has recently got launched is similar to gold mutual funds. The industry AMCs and Edelweiss AMCs also come with hybrid products which also include silver. So
Yes,
what's if you could share some more light on what's this silver ETF and silver mutual funds all about.
sure. So gold and silver, these are the two precious metals usually we know about, right? And since our childhood, we have seen our parents buying gold as well as silver jewelry. Uh, Gold and silver both share almost similar qualities. Even silver is a good safe haven. It has low correlation with equity. When things go wrong, even silver, usually acts as a good hedge against inflation and overall equity markets. Uh, the thing is, silver is like a mid cap of a precious metal, because we have seen whenever there is a rally in metals, especially in precious metals, silver outperforms gold. Uh, and recently, SEBI has allowed silver ETF. Gold ETFs were allowed long back. Silver ETF were allowed just since last year, and many fund houses have started launching these products for investors to make it easy to invest in them. We at Edelweiss also launched a very first time unique product where through a single mutual fund of fund structure, you get exposure to both gold as well as silver. And this combined product, which has a 50-50 on an average allocation to gold and silver, has proven very good in terms of hedging your portfolio against risk of downside when markets are not doing well. Also against inflation, it has done well. So in one product, you get both these benefits. Largely silver is basically has a huge industrial use as well. And we believe over a longer period of time, silver can also be a good investment because whatever semiconductor, the way semiconductor is used in maybe our smartphones or electric vehicles, even silver is being used a lot, whether it is in our smartphones or solar panels or electric vehicles. So the usage of silver will go up as much we are using our technology today, and this will create a good industrial demand for silver, along with demand for jewelry and from central banks. So that makes silver a bit, maybe I would say, more a better asset class, at least in the near term, compared to gold. And this combined product is also something people can explore if they're looking for this asset class in their investments.
Correct. So yeah, I think Niranjan, we come towards our end of our session today. Niranjan, it was extremely insightful, and I hope our viewers will take a lot of good knowledge out of this session. Thank you for your time to come and speak about gold mutual funds. I personally hope a lot of all millennial investors who are exploring mutual fund will definitely want to explore gold and as well as silver investment through mutual fund. So I think it's the time of Diwali and Dhanteras. Anyone who is wanting to take some exposure on gold, can definitely log into Moneyfy, explore gold mutual funds, and it's a very easy, simple digital way of onboarding and starting investments in less than 10 minutes. So please do check our app, and I am again specifying the link is given in the description to download the app. Thanks Niranjan, thanks everyone for patiently watching us today. Hopefully you have a very a good Diwali and a prosperous new year going forward. Thank you.
Thanks, Harsh, and wish all the viewers happy Diwali. Thank you.